Guys, in February, the economy lost 133,000 jobs. That was the worst number since the year 2020. Now, this March, we're told just a couple of days ago that we gained 178,000 jobs. So I want you to put this in perspective. In just 30 days, we went from one of the worst jobs reports in years to one of the strongest in years. The question I have for you is this: do you actually believe that? And more importantly, what are you doing with your money if this story about the jobs report somehow changes again? Because when numbers swing like this, in terms of jobs being created from way over here to way over there, you need to start asking questions. When the story changes this fast, you don't trust headlines. You prepare. Now, let me be clear and explain this, guys, because this is strange to me. Out of nowhere, we had a miraculous 300,000 job swing in 30 days. What happened? We're going to try to answer that in this video. And I need you to stick with me through this video because later I'm going to tell you exactly what I'm doing right now to prepare. And you can do the same thing if you're paying attention, okay? Now, the unemployment rate in this miraculous 30-day time frame where everything turned around in terms of jobs being created went from 4.4% down to 4.3%. So on paper, here's the kicker. On paper, everything looks wonderful. I mean, what do we have? Low unemployment that's going down. We have a whole bunch of new jobs being created. Awesome sauce, right? But let me explain what that actually means in real life. The unemployment rate, guys, is just the percentage of people who are actively looking for a job but can't find one. So when that unemployment rate number goes down, it sounds like things are improving on the surface. But that number only counts people who are still in the game, still looking for work. So if someone stops looking for a job, even temporarily, they no longer are counted in that unemployment number. So be clear about this. The unemployment rate is not counting everyone without a job. It's only counting the people still actively trying to find a job. That means this number can improve without the situation actually improving for everyone. This is why you never look at one number like an unemployment rate number in isolation, because one number can give you a very clean, wonderful story, while in reality, underneath that one number, like the unemployment rate, things are way more complicated. Now, let's talk about wages for a second, because this is where it starts to get a little interesting. Wage growth is simply, let me define it for you. Wage growth is simply how fast your income is increasing. And this matters. Why does wage growth matter so much? Because nobody really talks about it. Because even if you have a job, if your income isn't keeping up, you're going to still feel some pressure, right? In February, wage growth was growing at about 0.4%. In March, that dropped down to 0.2%. So yes, more jobs on paper, supposedly, but the money people are earning is growing slower because wage growth is down. So that's not strength in a job market. That's more pressure building up quietly, okay? And most people don't track wage growth. They don't track it, right? But we feel it. We feel it when our paycheck looks the same, but everything around us costs a little more. We feel a lower wage growth when our money that we have left over after we pay all the bills every month, when that money gets tighter, that's telling us that's a wage growth problem. So wage growth slowing down is not loud and it's not really talked about much. It don't make the headlines, but it changes people's lives steadily over time. And historically, check this out. Companies tend to slow down wage increases before they start laying people off, right? The first thing a job or a company does before they reduce the workforce and start getting rid of people is they slow down increasing your pay. Right? So this wage growth, which is hardly ever talked about or mentioned, it can be an early signal, not confirmation, but just a signal that something is shifting underneath. And our wage growth month to month has gone down. So keep wage growth in mind. It's a super important number. Now, here's another number that most people never hear about that's important to look underneath the surface of these job numbers. And I want to bring it to your attention. It's labor force participation. Right now, I'm giving you these things because these are things that people don't talk about on the 5 o'clock news or in the social media posts when they talk about the jobs numbers. But labor force participation is another important one. What it is it's the percentage of people who are either working or who are actively trying to work. And check this out. That number actually went down as well, from 62% in February to 61.9% in March. That means, here's what it means, basically. Fewer people are even participating in the workforce. So again, unemployment looks better, went from 4.4% to 4.3%, but fewer people are in the workforce. Think about that for a second. If the job market was truly getting stronger, you would expect that more people were entering the workforce, not less. See, because a strong jobs market pulls people in, right? That opportunity attracts participation. When people are participating in the job market less, it can mean that more people are discouraged or sitting on the sidelines for one reason or the other. And when fewer people are counted in the job participation, it can make the overall picture look better than it actually is, right? So now you got to step back and ask the question. If the amount of new jobs created swung by 300,000 in just 30 days, if unemployment is dropping, but participation in the labor market is also dropping and wage growth is slowing down, what's really going on here? Is the job market really as good as it seems on the surface? Because check this out. Real solid economies don't usually move this quickly without something underneath driving it. Either the numbers are being heavily manipulated or something else is happening underneath the surface. And when numbers start to move in these different directions, that's when you got to stop reacting to headlines and start paying attention to the patterns that we see in front of us. And most people aren't doing that. And that's why I'm doing this type of video, so we can all get a real look at these labor numbers and make changes accordingly in our own personal finances. Guys, a real quick pause. If you're getting value from this video, do me a favor and smash the like button below. And if you're ready to actually take control over your money, click the first link in the description box below to learn more about our 4-step financial reset. Enrollment is open right now. Don't miss this opportunity to actually do something about your personal finances. All right, let's get back to the video. Now, let me show you something else that doesn't get talked about enough. Layoffs. Layoffs, guys, actually increased, while the headline has turned around and told us that the job market is improving. And that creates more of a disconnect, because on one side, you're hearing, oh, job growth, unemployment going down. But on the other side, we're seeing and witnessing people being laid off from jobs. And the tech sector is leading the charge. About 25% of the layoffs this year so far are directly tied to AI. That means companies are not just cutting jobs, they're replacing jobs with artificial intelligence. And this is important because this is not just about the economy slowing down, perhaps. This is about how work itself is changing and transforming a lot of our jobs. And so when you see people talking about, hey, AI is coming, be prepared, take that seriously, okay? Some roles are being reduced, not because business is bad necessarily, but because technology is making some jobs just flat out less necessary, AKA AI. So that's a very different type of risk than what we've seen in the past. So I'm saying pay attention to that as well. So I'll ask you again, do you believe these latest job numbers? Not necessarily because they're fake, they may be, they may not be, but simply because they look super duper unstable. And when something is unstable, it doesn't necessarily mean it's wrong, it just means it can change quickly again. And if your life is built on something that can change quickly, that's where more risk comes in for all of us. And we gotta be aware of that, okay? So we have to be careful not to be building our lives on the headlines and on the social media posts, and build our lives on preparation, build our financial lives based on being prepared. Because the headlines, the stuff we read about and hear about, depending on what you read and what you hear, whether it's CNN or CBS or NBC or it's Fox News or what social media platform you're on and whatever your feed is feeding you, all that stuff can be temporary. But our financial position is what's going to carry us through these wild swings and changes that are taking place right now. So what am I doing right now? Let me talk about some things that we all need to be doing. First, I'm not reacting to just one jobs report, but I'm preparing for uncertainty. Preparation is not about assuming the worst. It's about making sure that you're not exposed when things change, because they will change. So I'm keeping my resume updated. I suggest you do the same. Not for when I need it, but before I need it, right? So I'm ready, because when opportunity shows up to maybe make more money, or when something unexpected happens, you don't want to be starting from scratch and scrambling. Oh, where's my resume? I got to update this. Let me go update. No, you have it ready to rock and roll, right? You want to be ready, okay? Another thing I'm doing is I'm not thinking about the next 30 days, the next jobs report, what's going to happen. I'm thinking about the next 5 years in my own personal financial life and in my own career. Because short-term thinking and short-term headlines, man, those things come and go. But your long-term direction is what's going to determine your ultimate outcome, your ultimate results. So what is your long-term 5 and 10 year outlook? What are you doing to prepare for 10 years down the road, the year 2036? And this is where money management matters also, okay? Cash reserves, having some money in case, just in case, an emergency stash, right? So you want to have some cash, especially if you're getting towards the point where you're going to stop working, if you're about to retire or something. You want to have some cash. The other thing is getting rid of bad debt. Debt on anything that's going down in value, whether you got interest payments or not on it. If it's going down in value and you owe on it, that's going in the wrong direction. You also want to keep your obligations under control, because when the job market shifts, your readiness is what's going to protect you. And that takes me to something else. You want to make sure that your income far exceeds your expenses, keeping your lifestyle low to a minimum, not trying to live above your means being your income. So if you bring home $4,000 a month, you want to have expenses that are $3,000 a month, not expenses that are $3,900 a month. You want to make sure that cushion is big enough, and that cushion grows. And it grows because next year you might get a raise, but you don't spend more. You do what you can. If you got to cut some things because inflation increases the cost of everything, you may have to cut a few things, right? But keep that cushion growing year after year. Because if your financial life is tight, guys, small changes in the headlines, they're just going to spark more fear. They're going to spark more anxiety and stress in your life. But if you created some cushion, you got cash reserves for emergencies, you got little to no debt, and you're managing your money with intention, you end up at the end of the day in 5 years or 10 years with choices, with options. And that's freedom, financial freedom. And that's where we want to ultimately be, no matter what the headlines are saying about these jobs reports. Because the danger is not a bad jobs report. The danger for each of us really is believing everything is fine when it's not, and we're not prepared. Look, the job market just flipped again, and this is why we all need to be paying attention. You don't have to panic, but you do need to be prepared, okay? Because when the story starts changing again, which it will, the people who are prepared, which is the camp you want to be in, are the people who are going to stay in control and ultimately have freedom with their money. So I'm going to leave you with this, okay? If these numbers shift again next month, my question to you is, would your finances be good or not? Look, my job is to bring you this information in plain language so we all can understand without the fluff. I hope I was able to do that for you today. If you got value from this video, drop me a comment below and let me know. As always, the best person who's going to take care of the old you is the young you. Until the next video, peace.